Today we'll talk about whether you can eliminate your tax debt in bankruptcy. My name is Claudia Moncars and I'm the founder of Moncars Law Firm, and we help business owners get out of trouble from the IRS. We have negotiated with the IRS to reduce over $3 million in taxes and penalties on behalf of our clients. Don't forget to subscribe to this channel if you'd like to see more videos like this. So now to our question. Can I eliminate my tax debt in bankruptcy? Well, the answer is depend. I know, not the best one. Bankruptcy is a taboo subject of discussion in our society, even though it is a perfectly legitimate tool to flush out debts and start over financially. When you're deep in a hole with credit card debt, mortgage payments, medical debt, and the like, bankruptcy can be a lifesaver. You can even get rid of student loans, which most people are shocked to find out. Then the question is, what about tax debt? That's money owed to the IRS. And most people assume that it cannot be discharged in bankruptcy, right? Well, like I said, it depends. To be able to discharge your tax in bankruptcy, you have to meet specific criteria. 4 of them, actually. Number 1, the tax are income taxes. Taxes other than income tax, such as payroll tax or fraud penalties, generally cannot be eliminated in bankruptcy. Number 2, the tax is at least 3 years old. The tax return must have been originally due at least 3 years before filing for bankruptcy. Number 3, you file a tax return. You must have filed a tax return for the debt you wish to discharge at least 2 years before filing for bankruptcy. Please note there's a difference between when it was due, which is requirement 2, and when it was filed, which is requirement 3 that we're talking about. And the last requirement 4, you pass the 240-day rule. This rule is that the IRS must assess the income tax debt at least 240 days before you file for bankruptcy, or not at all. So for now, let's put some real-life examples to these rules, because at the end of the day, that's how we best learn. Let's talk about 2 people, Terry and Peter. First, let's talk about Terry. Terry is a 45-year-old divorced father of 3. The last couple of years have been financially difficult for him, as it's been for a million of other Americans. Terry was laid off from his job as a restaurant manager in early 2020, and unemployment hasn't been enough to cover all his expenses. Hasn't been enough to pay for his mortgage, the car payments, the credit card bills, and still put food on the table. So Terry decided to look into bankruptcy. Oh, let me not forget, I forgot to mention, Terry also owes $34,000 IRS tax debt from a few years back. So Terry decided to look into bankruptcy, and he decided to talk to a bankruptcy attorney and find out what are his options. I met with Terry because the bankruptcy attorney brought me in to discuss the tax side of the situation. During our conversation with Terry and his bankruptcy attorney, I asked him a few questions to determine whether he will qualify for bankruptcy from the tax side. He could eliminate his tax debt. So the first question we discussed was what type of tax debt it was. There was no business tax debt involved, i.e. there was no payroll taxes, or there was no fraud, so just regular income tax. This was a good start. So first requirement met, check. Next, we talk about the timeline of his tax return. Terry handed me a copy of his tax return in question, which was for tax year 2017. This is another good sign because the tax year in question is now more than 3 years old. Second requirement met, check. Then Terry gave me permission to obtain copies of his IRS account records for the past several years. From those records, I determined that Terry filed his tax return a little bit late for 2017. It was due in April 2018, but he didn't file until a year later in April 2019. But that is okay, because it was still filed more than 2 years ago. So third requirement met, check. I then took a look a little bit more further into the IRS actions against Terry for that tax year. They did audit him in his return in 2020, and they did issue a bill for extra taxes. But that extra tax was tacked on all this summer, and the audit was also closed in the summer. Since last summer, which is more than 244 days, Terry, no additional action has taken. So Terry's in luck. Fourth requirement met. Yay! Terry qualifies to discharge his tax debt in bankruptcy from a tax perspective. Now let's talk about Peter. Peter's a lawyer, and for the past few years, he's been paying the medical bills of his best friend. Because of this, Peter has not been paying his taxes owed to the IRS. He has a tax bill over $72,000 that he has not paid. Also, Peter was over a few years late in filing his tax return for 2018. So if we go through the analysis for Peter, just like we did for Terry, to see if he qualifies to eliminate his tax debt in bankruptcy, will he? Let's see. Requirement number 1. The taxes are for income taxes. The tax debt is for income taxes for Peter. Peter does meet this requirement. Therefore, requirement, check. Requirement 2. The tax debt is at least 3 years old. Unfortunately, not all of Peter's tax debt is more than 3 years old. So not all of it will be eligible to be discharged in bankruptcy. Requirement number 3. You file a tax return at least 2 years before declaring bankruptcy. The tax debt for 2018 cannot be discharged since Peter was late filing that tax return and he didn't file it over a year later. So therefore, requirement number 3, not met for 2018. Requirement number 4, you pass a 240-day rule. Once more, Peter doesn't meet this requirement for all the years, so he doesn't get to discharge all the tax debt owed. Unlike Terry, Peter did not consult with a tax attorney before filing for bankruptcy. And while he was able to discharge some of his debt, he did not discharge all of it. And the worst part is that had Terry consulted with me before filing for bankruptcy, I would have been able to show him that he had to wait 6 more months. He would have been able to eliminate all of it, at least an additional $30,000. So bankruptcy, as you can see, is not something that you should tackle by yourself. If you owe back taxes to the IRS and are thinking about it, or you're speaking to a bankruptcy attorney, then the 3 of us, you, your bankruptcy lawyer, and I should have a conversation. Your tax debt might already be dischargeable in bankruptcy, or you may have to delay a little bit in order to delay your filing your bankruptcy in order to meet those timelines so you can discharge all of it. Either way, this requires some careful planning, both from a tax attorney and a bankruptcy attorney. So if you're ready to take the next step, give us a call at 786-541-2705 or go to www.talktoclaudia.com to book an appointment with us to see how we can help you. Until next time, ciao.